2009. There was trouble, certainly trouble in 2008 when I wrote an article for the New York Times. I said trouble is coming, but I said buy stocks.
Would you repeat that this time? If trouble's coming, would you still say buy stocks right now?
I would say buy stocks if you get enough for your money. And, you know, we buy a few stocks, but we don't look at, we're not buying the stock market. We're saying, I am buying, let's say American Express. We own American Express. You know, there's 815 million shares out and sells it. This morning's 126 or something like that. So it's selling for roughly $100 billion. Now, the real question is whether the company's worth more or less than $100 billion. It isn't what the stock is going to do tomorrow or next week or next month.
You said just a few minutes ago when we asked you on Worldwide Exchange, right now Berkshire Hathaway is a net buyer of stocks. You are in a net buying position?
We've been a net buyer of stocks, or I've actually been a personal net buyer of stocks ever since I was 11, every year. And there's been 15 American presidents in my lifetime, more than a third. I've lived under a third of the life. I didn't buy stocks under Hoover. I was only about 6 months old then. But there have been 7 Republicans after that and 7 Democrats. I bought stocks under every one of them. Now, I haven't bought stocks every day. There have been a few times I thought stocks were really quite high. And I've even written an article once or twice, but that's very seldom.
But you wrapped up your partnership at one point,
I wrapped up my partnership once.
Because you thought it was too expensive?
Yeah.
Okay. But this is not a time like that?
We own $240 billion worth of stocks. Now, we look at that as $240 billion worth of businesses that we own parts of. But I love owning those businesses.
You've also got more than $125 billion in cash sitting around.
Yeah, well, we'd like to buy more businesses.
We are here, Warren, with you at Berkshire Hathaway's headquarters building. This is upstairs in the room that's called the Cloud Room. And this is a room where you often take students to kind of talk to them about questions they have when they come to visit you. You also do some other things up here, too, other presentations.
Yeah, I had students here for dozens of years. And for many years, 40 schools would come in. They'd come in groups of 8 at 5 days. I'd spend a year. And they come from all over the world. We had them from Peru. We had them from China. We had them from Israel. And we had a good time always. I've given it up now, but I started teaching when I was 21, and when I got to about 88, I thought, I'll take a rest.
Well, there are a lot of questions that are coming in from viewers that have been hitting here today. They're waking up this morning looking at the stock market indicated down by almost 800 points for the Dow. We're actually off our worst levels of the morning, which is something to say when you're still looking at the Dow down by about 786 points. But people have a lot of questions about the economy. They're wondering what's happening right now, particularly with the coronavirus out there. You have a lot of economic data at your fingertips because not only are the many businesses that Berkshire owns, but the businesses you own pieces in. What are you seeing right now around the globe?
Well, it affects various businesses. I would say that I received commentary. I get some commentary monthly from almost all of the companies, and a good many of them had some comment about how it was affecting them, and however it was affecting them at that time, I'm sure it's accentuated. But they were affected by tariffs, they're affected by taxes, they're affected by, the most thing is they're affected by competitors and supply and demand over time. And I don't have the faintest idea what our businesses will be doing 6 months from now or 12 months from now. I do think that not only our businesses, but American business generally will be doing fabulously better 30 years from now or 20 years from now. And the long term is in my view, is very easy to predict in a general way, but an important way. I don't think there's any way to predict what the stock market will do 10 minutes from now, 10 days from now, or 10 months from now. So I work on what I think I'm able to do, and as desirable as it might be to know what was going to happen 10 minutes from now, that's just not something I'll ever be able to master. So fortunately, I can come to a pretty firm conclusion that 20 or 30 years from now, America business, and probably over the world, will be far better than it is now.
What are the momentary implications that you've seen from coronavirus? What's an example of a business?
Well, an example, for example, we have maybe 1,000 Dairy Queen franchises in China here, and they're just treat only, so they're the older type, not with food. But a great number of them were closed, but the ones that were open weren't doing any business to speak of. And Apple is, I mean, our much bigger holding is Apple. We own 5 0.6% of Apple, and the company came out and said that it's affecting not only its stores, but all kinds of things, supply chain. And I find that certain of our companies have got supply chain arrangements that are being affected by this that I didn't even know had those.
Like what?
Well, I got one from Johns Manville the other day, for example. You wouldn't normally think of them as having a big supply chain, but Shaw Carpets, or you name it. I'll guarantee you that a very significant percentage of our business is one layer affected by it. But they're being affected by a lot of other things too. And the real question is where are those businesses going to be in 5 or 10 years? Sure. They'll have ups and downs. Our candy business is a wonderful business, but it loses money 7 months out of the year. But the nice thing is Christmas comes every year.
When you look at the economy and how things were kind of chugging along, let's say beginning of this year,
yeah,
when things first picked up, how would you gauge the U.S. economy at that point?
Well, it's strong, but a little softer than it was 6 months ago. But that's over a broad range of business. You look at car loadings, rail car loadings, that's moving goods around. And there again, that was affected by the tariffs too, because people front-ended purchases, all kinds of things, always a lot of variables. But business is down, but it's down from a very good level. So I would say that looking at our 70 businesses, and that actually, they represent hundreds in addition, they're a little softer. On the other hand, I was out with the fellows from the Nebraska Furniture Mart just Saturday night, and their business was up quite a bit in February, but that's because weather was good. So you have a lot of variables that hit.
Why do you think business was down, let's say, the last 6 months? Is that a decline in confidence, or is it coming off of levels where there was unusual activity ahead of that?
Well, it isn't really down. It's just it leveled off and a little softer maybe now. But, well, tariffs, the tariff situation was a big question mark for all kinds of companies, and still is to some degree. But that was front and center for a while. Now coronavirus is front and center. Something else will be front and center 6 months from now, and a year from now, and 2 years from now. The real question is where are these businesses going to be 5 and 10 and 20 years from now? Some of them will do sensationally, some of them will disappear, and overall, I think America will do very well. It has since 1776.
But you still watch things like rail car loadings very closely.
I watch everything, but I don't do it to make specific investment decisions. But I enjoy. I mean, I want to know what's going on, but I also don't think that I can make money by predicting what's going to go on next week or next month. I do think I can make money by predicting what's going to happen in 10 years.
All right, well, tell us more about what's going on, just since you like knowing about those things.
Well, as I say, the certain businesses depend on weather to quite an extent in retail, for example, in given months. But the big trends you see are going on. I mean, in terms of the movement to online commerce, and I mean, the big stuff keeps moving. But we've got a big investment in the airline business, and I just heard, even more flights are canceled and all that. But flights are canceled for weather. It so happens in this case they're going to be canceled for longer because of coronavirus. But if you own airlines for 10 or 20 years, you're going to have some ups and downs in current business, and some of them will be weather related, and they can be all kinds of things. The real question is how many passengers they can be carrying 10 years from now and 15 years from now, and what will margins be, and what will the competitive position be, but I still look at the figures all the time. I'll admit that.
You mentioned the airlines, and you own stakes in all the major airlines, but none as much as Delta. I think you own north of 11% of Delta at this point.
Well,
right.
We own our largest position is in Delta. 3 of the 4 positions are mine. One of the positions is one of the other fellows of the 4 positions. But we own a very roughly close to 10% of the 4 largest airlines.
There's been a lot of speculation. In fact, some of the questions that came in over this weekend were questions about those airlines, wondering if you would buy any of them outright. Have you considered buying any of those companies outright?
It'd be very unlikely we would do that. I'm not saying it's impossible, but it's complicated.
Why?
Well, for one thing, they're regulated, and there's an interplay. I'll just give you an example, not that we'd be doing, but with Delta, we own 18% of American Express, and American Express is a bank holding company, and bank holding companies have limits as to what they can do, and we're a passive holder of a bank holding company with American Express. But then if we owned an airline